today we are going to talk about 5 things to avoid while you're house hunting. Hello, this is David Xie with the Xie Mortgage Team, powered by Nexa Mortgage. And this is really, really important because things are different. Eggs are $8 a dozen. We're definitely seeing like inflationary pressure going on. So we're seeing a lot of movement, okay, from the financial standpoint. And it's really making it difficult for people to qualify for homes. And these are the things that I've seen recently that have been the most detrimental when qualifying for a loan. We'll talk about the common mistakes, and we'll do this in 2 parts. So this will be part 1 of things to not do. I would say one of the biggest things that we're seeing that is a huge issue is buying furniture or household items with same as cash terms, okay? They may offer like teaser rates and teaser bonus offers and things like, hey, you can like not make payments for 6 months or 12 months. However, when we're going through the process like that, you know, with them like not charging you, and that's the financial institutions not charging you for 6 or 12 months, what that's doing is just stacking up payments and interest over a period of time and making it longer when they actually do the actual amortization. Let's just say it's 3 years term and then there's 12 months of you not having to make payments. Guess what? Those payments are now 24 months. And the lower the term, that means the higher the monthly payment on those furniture bills and household items are. And what happens is, even though you're not making a payment, like 0 interest for 12 months or 24 months, we are still counting it against you on your debt to income ratio. And when you're putting it into a more compressed term, like a 24 month or a 12 month or even shorter, guess what? That's making your monthly payment extremely high versus the credit limit. And that's really one of the biggest things that are hurting people's dreams of owning the home that they want. Number 2 is paying credit late. I've cut my teeth in the industry learning credit. You know, I got in at a very young age. And, you know, one of the things that I've always been really good at is looking at a credit report and basically being able to navigate through everything that needs to be done. And when someone pays credit late, that is the worst thing that can happen. So either paying credit late or having a collection or charge off pop on right before you're getting ready to buy a house. When I say you're paying late, that doesn't mean you're paying a day late or 2 days late, okay? We're paying 30 days late. The credit report should not have a late unless you're 30 days late. And I would highly recommend that you are always monitoring annualcreditreport.com to make sure that you are seeing all the activity that's going on with your credit cards and to see what accounts are there to make sure there aren't any fraudulent accounts. Third thing is like, you know, increasing your credit balances or credit card balances prior to us going through the home process or even before you qualify. One of the biggest factors in affecting your credit score and make it move the most is your credit card balance. The numbers to really remember are this, okay? 50%, 30%, 10%, and 1%. Each one of those are really important. So what does that mean? That means if your credit limit is $1,000, and the second you go over $500.01 or 501, your credit score takes a drop. So we want to make sure we're not increasing the balances. Under 30% is the second tier, and that increases your credit score even more. 10% increases it even more. And the reason I threw that 1% in there is I want to make sure that we are not paying everything off. When we pay everything off, what happens is, you know, that really hurts the credit score. Because now it looks like there's no activity. And if you leave something with no activity for a couple months, that actually has a detrimental effect on your credit score versus just paying. Depositing large chunks of cash or depositing a lot of large deposits, like, you know, and not being able to source where the money came from is a really big issue. What that means is we're going through the process and we're always verifying bank statements, whether it's 1 month of bank statements or 2 months of bank statements. When we're documenting the bank statements, we're going in and we're looking at expenditures and we're looking at money coming in, okay? The expenditures that we're looking at is we're making sure that you don't have any like, you know, additional money going out to someone. Let's say undocumented child support. That's bad. Depositing large amounts of money in, let's say you had shoebox money and all of a sudden you're under contract and you present bank statements to us, and now we see like $15,000 going in, and you had $0 in the bank prior to this 15 grand going in. That's a huge, huge red flag and a big no-no, especially if you cannot document it, okay? So we've had people save up wedding gifts and depositing it a little bit at a time. We've had people depositing a lot of money in at one time and not being able to source it. But we have to make sure that within the last month or two of you going through the loan process, that you don't have any large deposits. What you do before and after we own the home is not any of our business. But what you do during the process is our business. And then finally, I would say, people that are constantly changing jobs, right? We're always looking for a better opportunity. We're looking for something better. That's good and bad, right? You know, because we want to see stability in your employment. So if you are changing jobs, make sure you have a job offer letter. You're prepared to close probably within a week or two of you starting the job so that we can have a pay stub depending on the type of loan you're getting. Just understand what the processes are and understand what the processes are for each different loan type is really important. So when changing jobs, make sure, actually, when you're going through the loan process, make sure you understand and you talk to your loan officer and say, look, we're married now. We're going to go through everything together, whether it's good, bad, ugly. You got to let me know about it. I'm here to fix it, not call you out on everything. If you're going through the home process and you want to know more tips and tricks to avoid to make sure that you get to the finish line and cross it, and that's really important, give me a call. My name is David Xie with the Xie Mortgage Team. I can be reached at 757-478-8493. And I'm just saying, give me a call. Talk to you later. Bye.